Welcome back to another episode of Broker to Boss, where we go beyond real estate and dive into the conversation that create long-term wealth. I'm your host, Sanath, and today we have a fascinating guest, Shiv, who brings the global perspective on investing and the wealth creation. In this episode, we are unpacking one of the biggest questions investors ask today. Why are so many high net worth individuals and entrepreneurs choosing the UAE over traditional markets like UK? We'll discuss how wealth is accumulated, the mindset behind the successful investing, the tax and the business advantages of the UAE, the government's long-term vision, strategic initiatives driving economic growth, and why geography plays the much bigger role in the investment returns than the most people realize. Whether you are an investor, entrepreneur, or someone planning your financial future, this conversation is packed with practical insights that could change the way you think about building the wealth. So let's get started. Hi, Shiv. Nice to have you here.
Thank you for having me.
Thank you. I just want to know about if you can give me the quick intro that, why did you start Dubai real estate? Where did you come from? What were you doing earlier? If you can just, tell us.
Sure. So I spent some of the best years in my life in banking. Worked with the likes of City Gold and HSBC Premier in the past, back in Bangalore in India. Post which I got this opportunity of moving to Dubai into real estate itself. We were initially slated to go to Canada, but coincidentally we ended up in Hong Kong because of certain reasons which I don't want to really get into. But having said that, I spent about 3 years in Hong Kong real estate, sold multiple UK properties while being in Hong Kong. So I've sold probably 32 plus UK properties across London, Birmingham, Manchester, Liverpool, while being in Hong Kong, that is. And the funny thing was I had never traveled to the UK back then. From there, in 2019, we had this geopolitical crisis between Hong Kong and China,
Sorry, in which year?
In 2019.
2019, okay.
Yes. So in 2019, there was a huge fiasco. And the markets took a huge beating, and then money started flying out to Singapore, Malaysia. Hong Kong literally lost traction. I was tasked with setting up the local entity in Hong Kong. So we were doing international business in Hong Kong essentially. We were selling Dubai in Hong Kong. We were selling UK in Hong Kong, and then I set up the local business in Hong Kong in the sense that we set up a new entity in collaboration with Century 21. Hong Kong is a cartel market. Language is a barrier. It took me almost 3 to 3.5 months to crack the code on how to get into that market. We had barely started doing some really high value transactions. Our nominal transaction value would have been an equivalent of about 10 million dirhams or thereabouts. But just after that, we had this geopolitical crisis. That's when we took a call after realizing that it had already been about 6 months. And, business was not really moving. That's when we came back to Dubai at the end of 2019. And COVID happened in 2020. And then since then, there was no recourse back to Hong Kong. Dubai has served me very, very well. I was fortunate enough to head sales for one of the top 100 companies in Dubai called DRE Homes for a good year and a half, 2 years.
DRE Homes as a developer or a broker?
No,
brokerage
as a brokerage.
Brokerage
entity.
agency.
They're an 18-year-old setup. They're one of the top 100. And the reason why I say top 100 is still fortunate is because, Dubai has more than 5,000 brokerages as we speak. Okay. And I was heading sales for them for a while, and it was a good stint, in post which I decided to start on my own. And this is where I'm at.
Oh, awesome.
Yeah. So it's been about 3 years since I have started on my own. Yeah.
Awesome. I have just one curiosity. You were in banking, and then why sudden switch to real estate? What made you to go there?
See, banking, as much as it glorifies every bit of your daily life, and especially when you're with the likes of Citibank and City Gold as a wealth advisor and HSBC Premier as a wealth advisor. But the most important thing is, I saw an international opportunity come my way, which was not going to potentially happen in City or in HSBC. We were given the opportunity of coming to Dubai and then going to Canada, like I said initially, and that's why I took the jump.
Nice. So now do you like real estate more than banking or?
See, real estate definitely has a lot more money than banking, at least as far as the wealth field is concerned. Yes, investment bankers obviously make potloads of money, but
were in
money
the
is not the
investment
only.
banking.
I was in wealth management, to be precise.
Okay.
Yeah.
Very, very nice. Wealth management. When you said that, okay. I also wanted to ask you on the 2019 crisis, but maybe I'll ask you again. Wealth management. What exactly that? How you were serving in the wealth management? Whether it was only specific to the real estate where you were trying to cater your customers, or it is a diversified that you
No,
were
in
trying
wealth
to.
management, there is nothing to do. I mean, in wealth management, in banking, if that's your question, in banking, we did not do real estate at all. So in banking, I have dealt with different products like portfolio management services, structured products created by the bank itself. So in HSBC, it was different. In Citi, it was different. Then, of course, the regular mutual fund portfolios that clients
You mean
would invest into.
the different structure in the
Insurance.
sense? Yeah, the different structure in the sense equities, commodities.
No, structured product is a professionally designed product by the respective bank for their clients. Okay, so those are structured by the bank itself. So just to give you, without getting too much into the technicals, the principal is protected, and there are certain pointers which will either get you exponential returns or keep your returns flat. So just to give you an interesting fact about structured products, even if the market went down from where you had started your investment, you still could be making a lot of money. So structured products also dwell on derivatives, and derivatives bet on either side of the market movement. So I don't want to get into the technicals of that, but that's essentially what it
I see.
involves. So
But it will
structured
all
products,
goes in the market
insurance,
only, right?
mutual funds, equities, PMS, portfolio management services, REITs, which is real estate investment trust, all of that sort of thing is something that I did during my banking days. So during my banking days, I had zero tryst with real estate in particular,
I see.
then I just switched industries altogether.
So maybe that helped you, now maybe that is helping you to help the customers today, to maximize their wealth and all.
No, absolutely. So what I do today is build real estate portfolios for my clients. I've had clients who've independently or individually rather bought about 6 or 7 properties from me. And this is all retail. It's not like a bulk deal of 7 properties, one client, one time. It's been over the years. So I've been nurturing these relationships. And that is one thing that banking has taught me extensively, that, to nurture relationships is more important than just new acquisitions, because existing relationships can build new relationships far easier than you going out to market trying to source new ones, where you end up, for whatever reason, spoiling your existing relationship. So it's very important, and this is again something that I've learned from my banking days, that it is very important to give the right product to your clients, because there are a lot of products in the Dubai market that may not make money for people, will make money for brokers, sadly, but will not make money for you. And I consciously refrain from getting into those products, or even those developers for that matter, and that's how I've gone about my business.
Awesome. So when you started in Hong Kong, you were selling the UK properties. How were the customers, you were catering to the Hong Kong customers, or again the international customers, to whom you were trying to cater there?
No, see, Hong Kong had a mix of local clients who are the local
And
Cantonese
also,
speakers.
sorry to stop you, why in Hong Kong that you were trying to, were there, what was driving in Hong Kong in order to invest in the international market? Say, for example, in Dubai real estate itself is seen global in nature, and many of the expats are there, and even here you try to sell it to the outside UAE as well, right? because there is a huge potential here. So what was driving in Hong Kong you to do this?
I will tell you, that's actually an interesting question, and I'll tell you why. Because, see, the Brits were there in Hong Kong till 1997. I don't know if you're aware, like how in India, the Brits were there till 1947. In Hong Kong, they were there till 1997. Okay, so there is a huge British influence on the Hong Kongers, and they relate to the Brits. Not just that, a lot of Hong Kong people got British passports. So dual citizenships, they got British passports.
Oh, really?
When they were, yes, when the Brits were leaving, multiple people had the opportunity and they did get the British passports. Also, given that the Brits were there till 1997, there were a lot of Britishers in Hong Kong. Okay. The locals had a good interest in Britain because their kids were going to study there, right? And then you've got a whole different segment where, you know, people have been in Hong Kong for about 25 years, 30 years, either into banking or into different walks of life, and they again relate to the same thing, right? Which is why they're very savvy as far as the UK market is concerned. So it was very easy for us to position a UK property, and they would go in for it. So we've done multiple roadshows in Hong Kong, which had to do with properties in Birmingham, especially. We've done some roadshows with properties in Manchester. We were working with this developer called Alliance in Manchester, Prosperity, Seven Capital in Birmingham. We did a couple of developers in London as well. The likes of Berkeley, Barrett Homes, if you're familiar. So people in Hong Kong are very savvy as far as UK properties are concerned, because in some form or the other, they had some sort of a relationship with the UK. You know, so because the Brits were there till 1997, we entered Hong Kong in 2016. It was only 20 years apart. So there was still a very heavy British influence in Hong Kong. And, you know, on the fun side of it, there were a lot of, the pubs were filled with Brits even in the evenings. So it was like that sort of a thing.
Oh, really?
So
even
in Hong Kong.
Okay.
In Hong Kong, right? Because a lot of Brits were still working there, right? Because that was the life that they were leading for so many years, right? And we had quite a good time, and that's the reason why selling UK properties in Hong Kong was pretty easy. In fact, in 2016, selling Dubai was a little more difficult than it is today in Hong Kong than it used to be back then.
Really?
You know? Yes. So then if you were to tell somebody about Dubai, they'd be like, Dubai? What Dubai? What are we talking about? But the minute you talk to them about UK properties, it was very easy.
Yeah. One question, how are the property prices in UK, and how was the economy in the Hong Kong, that they used to park their money in the, whether they were like investors or they wanted to move there? How
like
they
I
were
said, there's a mix. There's a healthy mix. There were people who were looking at it from a long-term perspective, moving there to the UK because they had dual citizenships. There were people whose kids were going to the UK to study, and there were pure investors as well. So London per se is more of a market where, you know, people buy it for the snob value that I own a property in London. But the growth market is places like Birmingham, and back then Manchester. Today Manchester, of course, has grown significantly. So you may not have as much of an opportunity as there was back in 2016. The market's gotten a lot more mature. Liverpool is still potentially upcoming. The government in the UK has not really focused as much on the Liverpool market. But yes, Birmingham is the second largest financial capital to London in the UK. Done significantly well. There are a lot of infrastructure projects that are underway as we speak, like the HS2, which is the high-speed rail 2 connecting Birmingham to London. Current travel times would be about 2.5 hours. With the HS2 introduction, it'll probably come down to about 55 minutes, which is saving a good hour and a half. So this incentivized people who were looking. So a lot of these were bankers, right? So people were looking to work in London, and if they were able to live in Birmingham while working in London, they would actually spend the Birmingham lifestyle but earned the London packet, if you know what I mean. So, and there is a huge difference, by the way, in standard of living, cost of living between Birmingham and London. And people wouldn't mind commuting if the commute was slightly faster. And that's what HS2 kind of was going to incentivize. And that's where we sold quite a few properties in Birmingham. We did quite a few properties in Manchester as well, a few in Liverpool. Manchester was also because of the universities in Manchester and the fact that HS2 at a later stage by 2032, 2033 will connect to London in a much shorter span of time. So Manchester is well up north. But yeah, these were the predominant reasons why people were investing. Also, there was a good rental potential in the UK, especially in Birmingham and Manchester. So you're looking at north of at least 5.5%. Whereas in London being London, and as you would know that rents are inversely proportionate to prices. If the prices are higher, your rental percentages are much lower. And if the prices are nominal, your rental percentages are somewhat in the middle. And if your prices are low, the rents are high, which is why we still say that Dubai is a great market to invest into, because you're still looking at 7-8% rental, right? Whereas other mature markets, you're looking at about 5%, and Cat A cities like London or Birmingham, London or New York, or say Hong Kong, Singapore for that matter, you'd be looking at a mere maybe 1.5-2% rental income, and that's about it. So people were more interested in the investment aspect, the universities, and the fact that they could potentially somewhere do a Birmingham, London, work in London, live in Birmingham at a later stage because of their financial
this was my
careers.
next question. On a macroeconomical, what's happening in the UK which is attracting a lot of investments? Because I see a lot of I see here as well, the people started promoting on the UK properties and all. If you see that, the giant developers like Aldar, Modon, these guys are also have their, they are selling the properties there as well. Or these guys are developing the properties in the UK. What example in probably in Dubai being, which is kind of a transit country, which helps in trade, and it's Abu Dhabi being the financial hub of, they maintain the sovereign wealth, or they rank somewhere in the top on the sovereign wealth. A lot of investments are attracted towards UAE. In a macroeconomical way or macroeconomical factor, what influences the UK so that a lot of investments comes? Yes, you touched upon multiple microeconomical stuff that the government initiatives, and that you just give an example that Birmingham to London, how the transport facility they have improved. What macroeconomical stuff that which is attracting the investments in the UK?
Attracting investments in the UK or
Yes.
in Dubai?
In the UK.
At the moment?
Yes.
See, I'll tell you, this is more of a transitional thing. It may not be for something in the long run. Now, what has happened is the UK. So let's speak London first, right? So London is essentially one of the financial capitals in the world, right? Parallel only to New York, and then of course you've got Hong Kong, Singapore coming thereafter, right? And then we've got Abu Dhabi, Dubai, so on and so forth, right? So historically, people have been attracted to London, not just because of the fact that, it's a great place to be, it's got great vibes, barring the current upheaval that has been taking place in London where, and I don't want to dwell on the negatives, but everybody knows what's going on in London. But the point is, today people are seeing some people are seeing a certain level of saturation in Dubai. People are not very, very sure, especially during this war situation. Developers in Dubai are obviously expanding. It is not just to London alone. There are developers who've gone to different parts of Europe, to different parts of the US. Even one which is, and I did a recent trip with one of these developers called Mira, and they've done a phenomenal job in Georgia. They've picked up a golf course community, or they're building a golf course community in Georgia, gated community, replicating what we do in Dubai essentially on a hilltop. So it's incredible, So the thing is, different developers have different agendas, and yes, we are seeing a lot of advertisements in the UK for UK properties in Dubai. Sorry, but the thing is, now UK properties, if you were to look at, say, a Birmingham or a Manchester, you could potentially look at buying a property worth, say, £250,000, going up to as much as, say, £350,000, right? And if you were to look at the secondary market, it could potentially be even cheaper, because these properties are usually pretty old. These new developments obviously cost a bomb because land has become very, very expensive. Traditionally, London or any of these older cities have had a lot of properties go into redevelopment. Areas go into redevelopment, okay, because they don't have fresh land, right?
Right.
So it's not like, okay, Emaar is launching a new project in this new location. It's not like that. There is no new location left in the UK, right? Because they're an age-old country, and rightfully so. Having said that, these new developments are a craze because you get to enjoy the vibe, the traditional vibe of the UK. At the same time, you get to enjoy a modern, luxurious building, which otherwise a redeveloped building will not give you. So I'll tell you what redevelopment in the UK boils down to. It essentially comes down to them maintaining the facade of the building. They will literally clean out the entire interior, redevelop the entire interior of the building, but the facade of the building will remain the same.
Oh, I see.
I know you might find it not doable and you might not be able to picture this, but this is exactly what they do.
I thought they will.
They don't demolish anything.
And then,
No.
it's not that.
Redevelopment does not mean demolishing anything. So which is why when you go to London, you will see a lot of these houses still having the same traditional windows and facades and all of that sort of thing. But yet when you enter that particular building or you enter that particular apartment, you will realize it's an absolute modern setup. And it does not relate to the outside at all. And this is being done through redevelopment.
I see.
So the UK has very stringent standards on maintaining the facade and giving you a more modern feel on the inside. Having said that, new developments are extremely expensive, primarily because they're buying the land now, which is expensive. And of course, then if you're building a property to the caliber of what you see in Dubai or in Abu Dhabi, obviously it's going to cost you a packet.
Oh.
So when you see an Aldar or when you see any of these developers going to the Mac, for example, doing a project in central London, you will end up paying probably a lot more than what you would for the same property in Dubai, central Dubai. You know what I mean? Because they've kind of procured the land much later. And this kind of caliber being delivered in central London is a whole different thing altogether. And it's an absolute niche, right? So in Dubai, for example, the same caliber of property, the Mac will do, Emaar will do, say Omniath will do a better job, Ellington will do a better quality, so on and so forth, right? And you've got comparable buildings. But when it comes to the Mac Tower or when it comes to an Aldar small community that they are building in London, it's a whole different touch and feel. And a whole different thing that you don't really have a comparable or something that you can benchmark
So you mean that
against.
it's on the...
It's a notch higher. It's a notch much higher. But yes, what the ads that you're coming back to your point, I'm sorry if I would have digressed.
No,
but the
no,
point
this is very good actually.
If you're looking at the ads that are doing the rounds in Dubai, you're talking about properties in Birmingham, Manchester, which start at a low ticket size of 250 to 350,000 quid, which is about... $1.5 million going up to, or $1.7 million going up to $2.5 million on the higher side. And the thing with the UK is, it is always a 30-70 or a 20-80 payment plan.
Yeah.
So the UK does not do a 50-50 and 80-20 at all.
You know what I mean? My
mean?
next question,
So this is another key reason why people who have bought maybe 3 or 4 properties in Dubai and are wary of and Emaar, Nakheel, Miras, who are the top developers in Dubai, giving them an 80-20, and somebody comes to them and says, hey, what are you doing? Why don't you look at something which is exactly the opposite? Because essentially, coming from a pure financial perspective, the lower the denominator, the higher your return on equity. Because if your equity is a mere 20% or a mere 30%, if the market just gives you 30%, you're basically making 100% return on equity.
Right.
Whereas if I'm putting in 80% out of my pocket, or say even 50% out of my pocket, given that some part is mortgageable, and the market gives me the same 30%, that's 60% return on equity. It is not 100% return on equity.